Welcome to the Deep Dive. We're here to cut through the noise and really get to the heart of the latest information. Today, we're taking a plunge into the recent financial results from a major player in stainless steel, Jindal Stainless Ltd. We're looking specifically at their Q1 FY26 earnings, which just came out today, August 6th, 2025. Our mission, really, is to take all their official stuff, the press release, the financials, that earnings presentation, and pull out what actually matters. The key takeaways, maybe some surprising insights. We want to give you a clear, straightforward understanding of what's going on, why it matters, and what you might want to keep an eye on. So whether you track market trends, or you're just curious about how these big industrial companies work, or, I don't know, maybe you just want to understand a company that affects everything from your kitchen sink to big national projects. Yeah, this deep dive is for you. We'll try to miss the hard numbers with some real-world stuff to bring it to life a bit. Okay, let's unpack this.
Sounds good. And looking at the headlines for Q1 FY26, Jindal Stainless has put up some remarkably strong numbers. We're seeing positive year-on-year growth across, well, pretty much all the key metrics.
Yeah, and when you drill down into the standalone performance, the numbers really do pop. Sales volume hit 626,252 tons. That's up 8.3% year-on-year. Net revenue, INR 10,341 crore, which is up about 8%. And critically, their EBITDA, that's the core operational profit before all the deductions, saw a 4.3% increase to INR 1,048 crore. Profit after tax, the bottom line, pay up a solid 11% to INR 642 crore. Those are definitely some impressive figures for just one quarter.
They really are. And if we broaden the view, look at the consolidated performance, which includes everything. Net revenue was INR 10,207 crore, up 8.2% year-on-year, so very similar growth. EBITDA grew 8.1% to INR 369 crore, and PAT climbed 10.6% to INR 715 crore. But what's really worth noting, I think, is their consolidated net debt. It's at INR 3,869 crore, and that translates into a net debt to equity ratio of just 0.2x. That's very healthy.
0.2.
Wow. Yeah, it's low. It's a strong sign of, financial health, good management of their borrowings.
Okay, so you see these really strong numbers, this healthy balance sheet. The obvious question is, what's actually driving this?
Yeah.
How are they keeping this up?
Well, it seems to boil down to strategic agility. The company itself points to its ability to sort of balance demand, between the domestic market and exports. Domestically, we're seeing steady growth. Key sectors are firing. Automotive, metro rail projects, white goods, even lifts and elevators, all showing quarter-on-quarter strength.
Right, and you can see the direct links, can't you? The government's big push on transit networks.
Exactly, that fuels metro demand. And then general urbanization, more infrastructure projects.
Boost lifts and elevators. Yeah, it makes sense to align with those big national priorities.
It's smart positioning.
And they're not just riding the wave, are they? They're actively trying to build share and loyalty. They mentioned that co-branding thing, the Jindal Sati seal.
Yeah.
Started with pipes and tubes.
And now extended it to kitchenware, sinks. It gives consumers that quality assurance.
Plus that QR code loyalty program. That's quite a direct way to engage customers.
It is. So it's not surprising then that domestic sales accounted for, 91% of their total sales in Q1?
91%. Okay, so that domestic focus is clearly the main engine.
Definitely. But, despite that strong domestic base, they've also had to navigate some choppy waters globally. Geopolitical uncertainty, protectionist measures, especially in places like the EU, the US, that affects trade. Yet, Jindal Stainless managed to hold its export sales volume steady. Their strategy seems to be about carefully picking their battles, serving specific global customers, maybe focusing on niche applications or regions less hit by tariffs, and really pushing value-added solutions, not just commodity steel.
Moving up the value chain.
Precisely. So exports made up the remaining 9% of sales in Q1, which honestly, given the global climate, is pretty commendable.
That is fascinating. Maintaining growth with those headwinds while also pushing the envelope on what the material itself can do. Because when you dig deeper into the report, there's a lot about R&D, sustainability.
Yeah.
Stuff that goes way beyond just the profit and loss.
Oh, absolutely. And some of their R&D breakthroughs are quite significant. For instance, they manufactured and shipped India's first commercial batch of something called 9CR1 Mo plate. It's for BHEL steam generators. This alloy is pretty specialized, designed for high-pressure, high-temperature uses, so making it shows real capability.
Right, vital for core power infrastructure.
Exactly. They also exported a new martensitic grade, 1.4110, developed specifically for knives, and they produced a high nickel 304 grade with restricted ferrite content for L&T that's for structural uses. These aren't just small tweaks. They're pushing what stainless steel can actually do. positioning themselves as a key supplier for strategic sectors.
And opening up potentially higher margin markets, too.
That's the idea.
And it's not just the products, right? It's also how they operate. Their Gurugram corporate office got platinum LED certification. That's top tier for green buildings. Plus, they did their 4th annual plastic waste collection drive, gathered about 13.5 tons of plastic waste. That's a tangible ESG commitment, environmental, social governance.
It is, and what's really compelling, I think, is how these innovations connect directly to national priorities. Infrastructure, defense, even clean energy. They supplied high-strength steel for the Indore Metro's super priority corridor, that's public transit. Then their defense arm, Jindal Defense and Aerospace, or JDA, they actually substituted a super alloy with high-performance stainless steel for solid oxide fuel cells.
SOFC, for clean energy, right?
Exactly. Critical components. And JBA also supplied special steel strips for border fencing for the armed forces, and even low-alloy steel sheets for, get this, anti-tank guided missile motor casings.
Wow. Okay, that's quite a range, from metros to missiles.
It really is, and it raises that question, how do all these different threads, the R&D, the defense work, the infrastructure supply, how does it all tie into their bigger long-term vision?
It looks like a really tight integration, doesn't it? Core business, national development, future-proofing. And part of that future-proofing seems to be about empowering the whole ecosystem and really embracing digital.
Precisely. Look at their Stainless Academy. They've ramped up skill development, trained over 3,000 fabricators across India just last quarter. The total is now over 53,000 trained fabricators to date. That's huge.
Yeah, that's not just CSR. That's building your own skilled workforce, people who understand your materials.
Exactly. And they've even applied to become a National Council for Vocational Education and Training, NCVET, awarding body. Basically, they want to be the leading certifier for stainless steel courses in India. Plus, they partnered with MIT World Peace University in Pune on a course specifically about sustainable stainless steel in tunnel engineering. Very specific.
That's a serious investment in human capital for the whole sector.
Right.
And on the digital side.
They got ISO 27001 certification for information security back in May, which is, table stakes now, but still important. But more impressively, they launched Project Pragati at their Hisar plant. This integrates Dassault's Aprizo MES, that's manufacturing execution system, with Quintique's advanced planning system. Think of it as connecting the real-time factory floor data with high-level planning and scheduling.
And that's a first in the stainless steel industry.
Apparently so. This kind of smart manufacturing, they expect it to cut lead times by 10–15%, optimize inventory by maybe 8–10%, and just give customers a better experience with real-time order tracking.
That gives them a serious edge operationally.
It should, and these efforts aren't going unnoticed. They're racking up awards. The Jodhpur unit got commended for environment management by CII-ITC. The company won the Diamond Trophy at the National Awards for Manufacturing Competitiveness for the 3rd year running. The Hisar unit keeps winning 2 Sustainable Organization of the Year, the Excelsior Atma Nirbhar Nation Builder Award, multiple wins there. Plus, Jodhpur got a Best ESG Performance in Decarbonization Award, so broad recognition across the board.
Okay, so you put all that together, the innovation, the sustainability focus, the digital push, the skills development. What does this picture tell us about their long-term competitive strength?
Yeah.
Sounds like they're building something really robust.
I think they absolutely are, and their strategic investments and financial prudence back that up. We mentioned the net debt INR 3,869 crore consolidated, but that 0.2x net debt to equity ratio is key. It shows they can manage expansion without over-leveraging. They also paid back almost all their remaining non-convertible debentures, about INR 187.5 crore in Q1. Only a tiny bit left due by late 2026. And their credit ratings are holding strong. A-stable long-term, A1 plus short-term. That signals financial discipline to the market.
Right, and looking ahead, they're clearly not sitting still. Big expansion plans.
Definitely. They've approved setting up a joint venture in Indonesia, PT Glory Metal Indonesia. It's for a stainless steel melt shop. The investment is around INR 715 crore. And the goal is to boost their total melting capacity from the current 3 million tons per annum up to 4.2 MTPA by FY27.
That's a significant jump in capacity, over 1 million tons more per year.
It's substantial. It's a clear strategic move. Expand globally, diversify where they produce, tap into those growing Southeast Asian markets. And alongside that, they're investing heavily in sustainable energy. They've put in INR 79.20 crore already towards a total commitment of INR 132 crore for a 33.64% stake in Oyster Green Hybrid One Private Limited. The aim there is to develop a 282 millilb hybrid renewable energy project.
To meet their own power needs.
Primarily, yes, it's a smart move towards self-reliance, greener operations, cutting their carbon footprint, and ultimately controlling energy costs long-term.
And the managing director, Mr. Okide Jindal, his comments seem to echo all this, right? He talked about reinforcing market leadership through being customer-focused, innovating, being efficient.
Yes, he did. He specifically highlighted their growing presence in railways, automotive, infrastructure, seeing those as key growth areas. And interestingly, he also pushed for a dedicated national stainless steel policy, calling it increasingly imperative.
Trying to shape the environment they operate in.
Exactly. So if you connect those dots, the capacity expansion, the big renewable energy investment, the push for national policy, it paints a very clear picture. Strategic long-term growth combined with a real focus on sustainability, securing materials, boosting production, cutting environmental impact, and influencing the rules of the game. It's quite a holistic strategy.
It really seems to be. So, wrapping up our deep dive into Jindal Stainless Ltd's Q1 FY26, we've seen strong growth, really driven by strategic agility between domestic and export markets, cutting-edge R&D, a deep commitment to sustainability and digital transformation, and pretty significant investments in future capacity and green energy. And it leaves you with a thought, doesn't it? As stainless steel becomes, as they say, the material of choice for nation building, from complex metro systems to specialized missile parts, consider how a company's financial results start to mirror not just its own health, but maybe the broader economic and strategic priorities of the whole country. What does it actually mean for India when its core industrial players are investing so heavily, both in domestic innovation and in sustainable practices? Something to think about. We'll leave you with that.